morning, everyone. I'm Baiynd. Welcome to the Place Your Trades Network. We're the network that focuses on trading daily options using CME Group Event Contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natty gas, and copper. Today, we have a great show for you with my friend Anne-Marie. Today's podcast is brought to you by Tradevate, which has built a custom app dedicated to trading CME Group Event Contracts. This is what we're all using at Place Your Trades. Hi, Anne-Marie.
Hi. It's
How
always
are
good
you?
to be sunshine with you. I'm good.
I'm thrilled to have you on.
I'm
Also, for those of you watching, last week I came to you from Steamboat, and this week I'm in Austin. I'm on a world tour.
Hope you're having fun.
I am having fun, but I really miss my kids.
Oh, I get that.
So I'm ready to go home.
That's awesome.
So I wanted to talk today about 0DTE's and event contracts. And I know you're like the options expert. So what's your take on what's going on with 0DTE's?
So thank you for calling me the options expert. I would say that is being very generous, but I do trade them a lot and I am super familiar with the way they move. The lovely thing is that they're very similar. To call something an event contract and to look at a 0DTE, it's the same sort of thing. You are purchasing for the long side, you're purchasing a contract and it expires at the end of that day. So a lot of folks look at event contracts and go, wow, that seems like a crazy kind of animal. But in fact, we have those. And indeed, every week and every month of every option chain has a 0DTE day, right? If they all expire in one day or they expire weekly, on the day they expire, they're all that 0DTE. So we get to learn a lot about how they move and then push that into the event contract space, which is quite lovely.
So you personally trade 0DTEs?
I do. I like them.
You kind of like think of a 0DTE as like a riskier type animal, right? And when I found out that you traded them, I'm like, good for Anne-Marie harnessing that. I tried to trade them and find them almost impossible. So how did you?
So let's talk a little bit about probabilities. Okay. With the 0DTE, we see certain things. Big money trades 0DTEs so that they can collect alpha daily, while whatever it is in their longer term investments move around. And so what we end up seeing is that most of the options, 2 or 3 strikes out of the money on either side, are all sold. And they end up being tens of millions of dollars, sometimes billions of dollars. And most of the time, they figure out here's about where the market's going to move. But a day like last Thursday and last Friday, we actually saw the market really move very aggressively. And that's because all those people who were short in the wrong direction have to make changes to their portfolio, as well as the dealers who are the guys pulling the strings behind. They're the guys that make the money in between the bid and the ask. And so they have to sort of mechanize that motion. So it's great to make money when they're sold. 75-80% of the time, these options will expire worthless. So going long is usually the outside bet. And so what you would do is go short. Now, many of us don't have the ability to go naked short because it has a lot of risk attached to it. And so what we'll end up doing is doing a short call spread or a short put spread. But on days like today, where we come out of the gates and we say, would you look at that? everything says we're going to move to the north. We look at flow. And when those 0DTEs tell us one thing, but flow tells us we're moving in one direction, we can just buy them outright and they won't leak theta like they normally do. And that also makes the event contract very powerful on days that we see that, because again, 0DTEs are levered instruments still, and they're always times 100, when an event contract really is one. You could say, hey, I'm going to risk $8 in hopes that I can collect $18 or $20. And so that really is the mechanical difference. But we certainly can see where the market's going from the flow in those 0DTEs.
I really like that term, leak theta.
Yeah.
Did you come up with that? It's just so descriptive.
I used to say bleed, but yeah, I think I moved to leak, but then leak sounds really just as disgusting if you think about it for too long.
I consider it like a deterioration. But I think leak is actually a better descriptor of what happens.
Yeah, it does. It starts to leak all its value. And we really, that's the thing when you trade an event contract or a 0DTE, speed is our friend. And a lot of times speed makes us really nervous. But in the market, once it starts moving, although the leak is occurring, it begins to occur very slowly because it moves further into the money. And the deeper something is in the money, the less there is to leak.
Fascinating.
Yeah.
Yeah. Anne-Marie, how long have you been trading options?
I actually began trading options. So it's about 23 years I've been in the option space. I absolutely lost millions of dollars. Because I didn't really know what I was doing. I was a complete moron. I was like, oh, wait, I'll do this. It was a travesty, really. But
here.
I was excited. I love the market. I love finance. I honestly believe it's the most exciting work in the world. And so I just said, hey, you got to figure this out. So step back, stop losing your money like a mad person, figure out what's going on. And I gravitated to the futures because it helped me understand mechanical flow. And then when I went back to the options with the understanding that mechanical flow really means something, now we're in the age of where the option is the tail wagging the dog. So it really is used to be the markets would move, the options will follow. But as option volume has increased exponentially and continues to do so, the chains tell you what's happening more so than the instrument. So the instrument actually ends up having to follow the chains. I know, it's bizarre, and it's flipped from the way it was 15 years ago.
I didn't know that.
Yeah.
How do you choose the strike and expiry of the you trade the 0DTEs, but if you were going to buy something further out, how would you choose?
Okay, so I don't normally buy, I normally sell.
Okay.
Unless there is something that told me, like this morning, hey, listen, we're going to have upward flow. And I knew a lot of shorts were going to be caught off balance. And so what might make me choose an event contract is seeing where weekly resistance is. And then I'll go way up to the north and I'll go, yes. Right. So that's really the big thing. I'll say, where were we on our weekly highs? And I'm going to go back there and I'm going to say, okay, I'm going to pick an event contract that says yes over that weekly high. And I'm going to watch it come much closer and multiply much faster. So if you are looking at those event contracts, the best thing to do is say, where's my weekly low? Where's my weekly high? And am I making lower lows and lower highs, or have I stopped doing one of those things? And so we could see early this morning, hey, we got that CPI number. It faded, but it did not break the low of the overnight. And so my thought was, we're going to run to the upside because I'm holding that low. And once I get up over the close of the prior day, then I go, oh, now I'm going for the open of the prior day. And so everything is like a stair step for me. And so that's really how I'll go out and pick my strikes.
It feels counterintuitive that so far we're having a green week with the banks failing.
Well, we're in the state of bad news is good news.
Yes.
And so my suspicion as to why that is happening is because everyone's thinking, oh, this is the news Powell needs to turn us in the other direction. He's just going to stop raising rates. And as a matter of fact, he's going to cut. So Felix Zulauf, who's this uber famous money market guy that's as old as dirt, he's just really old, been around a long time. And he said, hey, listen, the Fed is not going to be able to raise rates in March. I think things will have a problem by then. And so maybe that's the thing that comes to fruition. But the reason the market's moving is because people are going, oh, yes, we've got CPI is bad. And then these banks are failing. And so Powell does not have ammunition to continue raising rates. But there's a whole other group of people saying the exact opposite. The reason we're moving in this direction is a flow situation. I just think too many people sold off because everybody that's short wants to see the market crater, right? They want to see us all living in tents in front of some public office somewhere. I don't know. So what they've done is really lever short. And so they're just hoping that moves, but that's not how bear market moves at all. Bear market moves from savage oversold to savage overbought to savage oversold. And it's getting a lot of people flat-footed because most of the people who are in the market are really 20 years younger than me. And so they weren't trading during the global financial crisis like me. I mean, I was trading then. I was just agog at what was going on. But I really did learn about these savage flows that come in and out. And when people tip the balance on a short time frame, what that does, because the tail wags the dog. And the way they'll do it is they won't lever up in the broad. They'll go and they'll buy these contracts or sell them in the option chains and get literally 10x for a tenth of the money. So, I mean, they are able to lever hard. And that is really what pushes things into a space where they simply have to get out if they're too short, which is what I think today is.
So I'm in Austin because I'm at South by Southwest because my friend made a documentary that's premiering here about AMC and GME and the squeeze and day trading and sort of what happened there. And we were doing a Q&A yesterday, and we were talking about the mob mentality that happened with GME. And someone asked a question about morality in the market, which I thought was sort of fascinating. And we were talking about how when it's a bull market and times are good and people are happy, that elation that comes with that, and how many traders flooded into the market.
Yeah.
And then the switch from the bull market to the bear market has sort of caused like a whole kind of switch in the attitude of the traders. And it has become more of a conflict, right? Because it's hard to watch money in your account disappear. It's hard to watch your long-term holds fall like that. And it becomes like a mental sort of warfare in your own head that I feel like take out sort of on other people or other traders,
for sure.
And the reason I brought that up is because in my mind, the turning into a bear market has eliminated so many day traders who just don't know how to trade it. But we were talking in our chat the other day about the volume of 0DTE options. So I'm wondering, like, is that because traders who've been trading a long time are adopting the 0DTEs, or am I wrong about retail traders getting knocked out? And is the volume of retail traders like so high, and are they the ones trading the 0DTEs?
So I just read the statistics on that, and only 6% of 0DTEs are expected to be retail traders. Now, you might say, well, how'd they get that number? And the reason is size. Who participates in the 0DTE game right now that's making big money are institutions. I heard about a hedge fund, and I think Brent from Spot Gamma might have been the guy that said something about it, but forgive me if that's not right. He said something about a company that had been making something like 75 million, and they've turned it to 700 million trading 0DTEs.
Wow.
And so again, you might go, well, how does that work? It's just a probabilities game. You can get alpha if you're levered at a bank and they go, okay, we'll give you, 10x or whatever it is, whatever financial strength you have determines what kind of levering they give you. And you go out and you sell naked strangles every single day, and you can sell 50,000 of them and they expire every day. You're going to do that until they make you stop.
Yep.
And so that's really what it is. About, I think they said 80% is pure institutional participation. People who have stocks that are running portfolios, and those stocks are going like this, and they're like, we got to create alpha somehow. Let's go use some 0DTEs. And probabilistically speaking, it's way in your favor to just sell them a little bit out of the money until you bump into a day like, the other day, or maybe a day like today. People think it's going to be range bound, and it continues to climb through the order of the day. I was just checking the price when I looked over there the first time. And so that really is what's happening. I think a lot of day traders have left, but listen, that old adage that says, a rising tide lifts all ships. It's pretty easy to make money if all the market's doing is going up. And for those of us, listen, I watched people in 2021 and 2020 make so much money that I was looking at myself in the mirror going, holy cow, those people have been trading for 2 years and look at what they've done. But, for me, discretion has always been a better part of valor. And so I go, I know what's coming, and it's going to be ugly, and I don't know when it's going to happen, but I'm out. Hard swerve. And so I didn't get to participate in all that wonderful fun. Now that the market's been a little bit more like I expect it to be, it's been easier to trade, which is kind of weird because it's still a very hard market. It's just easier to trade because you go, oh, it's normal that should pull back. And in 20 and 21, I was like, wait, it's normal that should pull back. But nothing was normal then. It was just straight up all day long. You just barely had time to buy a dip. And so, that's really what's happening. But I do think that you are right. Retail traders did get washed out. But, maybe the rise in crypto again is going to have them coming back. Trading is like a fever. once you get it and you love it and you see where it works, you're like, I hope I can do this until I'm 100, which is me, right? And so I think once you get the fever for it, you're always going to come back. So they'll rotate in, but you really got to build some skills, and it's hard to build skills. I know I've got all these adages today, but I don't know who said this, but a skilled sailor has to have come across rough seas. And so
into that. Oh, you're so on point today. I'm just loving it.
You're so kind. Yeah. So yeah, you got to have some rough seas. And if you're willing to learn, then great. Or else you're going to go, this whole thing's rigged. Hey, listen, it is. Play anyway. Right? Just figure out what the landscape looks like and stay out of trouble when things go crazy. Like, I didn't trade at all yesterday. I just sat and watched the whole thing because I had no idea what was going to come out of the news. So I was like, you know what? Get in my bag of popcorn, because I had no idea. And I've been around long enough to know if you don't have a good idea about what's going to happen, it doesn't end well.
I was really blown away that yesterday was not a red day. I just kept looking at it like, what's going on? Luckily, I was here in Austin, not sitting at my computer trying to trade it, but just wild. The bad news is good news thing is just really blowing my mind. And I haven't been around that long. So maybe, it could just be like, I have no idea what I'm doing, but also like wild.
Yeah, it is. And it truly is a Gordian knot right now. I don't know if it's going to take a sword to cut that one, but it is so complex. The one thing I can say is that as long as you're not highly levered, you're going to be okay. Wait for the really deep dips, go to the monthly charts and say, okay, I know big money participates on big time frames. They must be invested in the market. So what do? They go buy on the cheap. And we hit a monthly low. And as soon as we did that, we started lifting. And then we were above the prior month. And that's really all she wrote. It just started coming right back into that framework of people are buying these deep dips. They continue to buy them. And they will continue to buy them until something scares them. And then we have some kind of capitulative selling. But there's nothing like that in the market right now, for sure.
I have heard somewhere that you can't really be in a bear market without the capitulation. Is that true?
I don't know. I'm not going to plant a flag there. What I do know is that fear looks a certain way. And the way fear looks is not only is nothing green on your heat map, but everything is bright red for days. And it takes days for that sort of, because there are some people that go, you know what, one day does not a market make, I'll see what's going on tomorrow. And they'll come in tomorrow and it'll look bad again. And they'll go, you know what, that's all right. It's just coming into my near supports. I'll just take a look. And that third day, it's sort of like, that's all we've got. I don't know what it is about this 3-day rule for humans, but we just can't take that kind of pressure being down in our long-term portfolios for more than 3 days. And then it's bright red, bright red, bright red. And then actually the market begins to turn, because from the human condition, our brains tell us you got to run when things get scary. And when it looks really awesome, you got to run to it. That's why sentiment indicators are contrary indicators, because Schwab just put out one like a week ago and they were like, oh yeah, retail is like, they are the most bullish they've been since whatever. And I told some folks, I'm like, time to start covering everything that's long. And so it's because our brain is simply not engineered to trade. We have to be trained up to look at it. And that's why it's all the gray hairs like me hanging around in the market going, oh yeah, I've rode this rodeo before.
Yeah.
Right. And that's really what it is. So whether it's a bear market because of capitulation or not, I know what fear looks like. I know what it looks like. It's like, I don't really care how much it is. Just get me out. Where there are gaps between the bids or the asks that are incredibly high. And so you go, okay, that people are really scared there. And so you watch them scared for 3-4 days. People will try to bounce and then they'll get scared again. But I definitively believe that we are in a bear market cycle and there are tons of great opportunities in there. But what you have to be is the Zodiac boat. You have to be one of those Zodiac boat drivers. Super speedy, in and out, get your money, and wait. This is not an investing environment because you're going to get drawdowns that feel like a hammer to the side of your head.
Well, Emery, the market's about to open, so we're wrapping up the show, but I wish that I could just like shrink myself down to a little elf and sit on your shoulder and watch you trade, because what a gift that would be. I'd just be right there. Emery, I just love you so much. Thanks for coming on the show.
So sweet. I feel the same way. Thank you so much for having me.
Good luck, everybody. Have a great day. Thank you, Emery.
You're welcome. Congratulations on the documentary. I can't wait to see it.
Thank you.
Take care, everybody.